Hello, my friends. Today I'm going to go over a theory called smart money concept. If you want to be a trader in the stock market, you have to learn it. There is no ifs, ands, or buts. Now, what is a smart money concept? It is the ultimate version of supply and demand, or you can say the wide range of support and resistance. Understanding smart money concept is like having a third eye in trading. The smart money concept was created by inner circle traders, in short ICT. You can go to their site and study, but problem with them, it's very long and hard to understand. So what I decided to do, I put the smart money concept into a grinder and extract the juice and deliver to you guys. So now let's go over to the computer, open up the chart, and in this case, extract money.
So before I go over to the chart, please have a piece of paper and write down this information. This is very important. Smart money concept consists of these four important components. Okay? Order block is an area where lots of pending orders waiting to be executed. Other word, traders are basically trapped there. Then you got fair value gap, is the price between previous candlestick low and the following candlestick's high. Supply and demand, an area or zone where a security price reversed in the past. Supply, big selling, demand, where actually big buying happens. Okay. Liquidity grab, where the market makers or the large institutional investors aggressively buy or sell large amount of shares in an attempt to take advantage of a sudden shift in the market. Example, like a news event or other factors. And what is the point of liquidity grab? I will explain it on the chart. So now let's go over to the chart. Analyze. Okay. Click a new tab. Type www.tradingview.com. Go under the support charts. Well, I'm doing Forex currency pair U.S. dollar versus Canadian dollar. Okay, so click. Now, how do you identify order block? Okay. Now, let's say I'm watching right here. The US dollar is going down, down, down. Now, here I see a bounce back a little bit. And then next candle, I see a hammer. By the way, you have to know some of the candlesticks, okay? These are the basic ones you have to learn. If you don't know, you have to learn it. And in future, I'm going to do some videos on candlesticks. So for now, I'm assuming that you know the basic candlestick, okay? So as soon as I notice a hammer candlestick, now I'm going to mark this candle actually registered the lowest point. So I'll put a mark right here. I don't want to see any other candle closing below this mark. If it's, then I'll look for the next one. But for now, I'm watching this one. Okay, so now I don't know, this might be an order block, but I'm watching now. Now I see the next one. It went up, next one went up. Now look at the third candle. When a candle registered the lowest, you have to look at the previous candle. So this candle, if any candle on the right side close above this candle, then whole area, this area become an order block. Okay, so now look at, this is my, this whole area, as soon as this candle close above the previous candle, the red candle, now this area is an order block. So I would be taking a long position somewhere here. And when you trade order block, always 1-to-1. Okay, so for example, from here to here is like somewhere 64 points. My target would be somewhere here 64 points. Okay, this is the safest. 1-to-1 is always the safest. As you can see, after this, look at the sharp drop. Why? Because most of the traders are taking 1-to-1. Okay, so this is why they're selling right here. Now this area is an order block, and I took a trade 1-to-1. My target was right here somewhere 64 points. Okay, now look at this area. It came to the zone, and you could see a sharp rebound. Why? Because remember, the earlier I used the word that order block is an area where a lot of pending orders sitting here waiting to be executed. And I also used the word that some of the traders are trapped. Let's say if you did short right here, somewhere here, now you're trapped because you didn't know this order block before, because it wasn't there. You thought it's going to go down, down. You short it right here somewhere because someone has to sell it in order to go down. So let's say last person sold it here. Now he's trapped because he realized as soon as this candle closed above this one, now is this whole thing became order block and it's going to go up. So what he does, he's going to switch his position. He's going to keep the short position, but he's going to, what we call hedge. He's going to buy a position now. In the short position, he will be waiting somewhere here to cost, to exit out cost to cost. So as soon as it came here, this short position, he bought back the pair. So now he's even out right here, somewhere cost to cost. This is why sometimes you see a sharp rebound. So just remember, whenever you see a order block, usually come down back to the zone and a sharp rebound, because this is a lot of pending orders are here waiting to be executed. Okay, so here look at another order block. I want to give you an example of another one. Look at right here. You see, this red candle actually registered the highest point. Okay, so now you have to look at the previous candle. Look at this one. As soon as a candle closed below this one, now this area is the order block. Now look at here, another order block right here. This one registered the lowest, and this was the previous candle. And look at this candle actually closed above the red candle. Now this area is an order block. This is also order block, but notice something different between this one and this one. Okay, now when the next candle, see this candle actually gave me the confirmation for the order block, but next candle it went back here and touched and then bounced back. This red candle, look at it, touched the area zone. But in here, the next candle went up sharply. It didn't go touch the zone. This area right here in between the order block and the area didn't touch. This is this area called fair value gap. So when you have a order block plus fair value gap, now this whole area becomes supply and demand zone. Look at this is it's a very easiest way to find out and quickest way you can find supply and demand zone. This order block plus the fair value gap equal to supply and demand zone. Okay, so now this area is the demand zone because supply usually when you sell, demand is when you buy. So this is from here is the demand zone. This area is a from here, but in this case is it was just order block, so this there is no supply. But if this thing were here, then you would say it's a supply zone. Supply you sell, demand you buy. So this is the quickest way and the easiest way to find a supply and demand zone. Okay. Now the last concept is called liquidity graph. Okay. When it breaks the swing low or swing high, and then it goes to the opposite direction. That's the definition of liquidity graph. Now I know you're confused, but let me explain to you. But this example, my friend, watch very carefully because this is a very important concept. If you look at the internet, you will have thousands of definitions. You will be confused. Okay, so now if you watch this one, it's a very simple concept, very easy to understand, and once you understand it, it's a piece of cake. Okay, so now remember earlier I gave you example about the order block. So now look at this whole section. Okay, this area. Now let me delete this part. Okay, now look at this. This candle, the green candle actually registered the highest point. Now, and as soon as I saw some of the candlestick right here, doji, it actually looked like this is, I'm watching for a potential order block. Okay, now I'm not sure, but as soon as this great candle, this candle created the highest point, and then previous candle is this is the lowest point, but this one closed below this candle actually closed below this point. So now as soon as I saw this area is my order block. Okay, actually this candle created the order block. Okay, now remember I said earlier that your stop loss would be when you, in this case I will be taking a short position, and my stop loss would be somewhere right here. Now remember I said as soon as it touched the order block you should be in the trade. But wait, if you wait for the retest, it's going to save you lots of money. And 80% time you will be right with order block. Okay, so now look at this. Always wait for the retest. Now if I play back, look at the retest. Look at this one, you see the retest. As soon as, if I waited, look at this one, as soon as I saw this, but then I could take trade somewhere here. Okay, so now you see, if I waited for the retest, but before, if I didn't wait for the retest, I would be, my stop loss would have triggered somewhere here because my assumption was somewhere in this range, this area, the next candle is going to rebound. But in this case went, so this is what called liquidity grab, because those market makers, they don't want you to make money. So what happened, they trigger your stop loss, and then they reverse the position and they go back to the direction originally it was intended to do. Okay, so this is why it's very important. Okay, my friend, always wait for the retest. And so thank you for watching this video. Please subscribe my channel, put a comment, and so it will motivate me to make more videos like this. Okay, thank you again.